Welcome everybody to the High Return Real Estate Show. This is Shecky, and I have right next to me my amazing and illustrious business partner, Mr. Jack Gibson.
What's up, man?
How you doing, brother?
Good.
It's nice to have you sitting next to me. It's kind of
we've never done a podcast where we've been right next to each other.
No, we never have. So we have the rare situation where Jack and I are in the same city, which doesn't happen very often, and we only had one desk and one office to make this work. So here we are. Anyway, we've got an amazing guest today. This guy, we've actually both been on his show, and let's just say this, he's got a bit of an accent, and
it's cool, though.
It's a cool accent.
Yeah.
And this guy is, if you're not motivated to go out and be successful in real estate after listening to this guy talk, then there's something wrong with you. So we're both like really excited to have this guy on the show. We're going to come back in a minute and introduce him.
Welcome to the High Return Real Estate Show, the podcast for heavy hitters. 2 men, 1 mission. It's time to build your empire.
All right, welcome back, everybody, to the High Return Real Estate Show. I'm here with my business partner, Mr. Jack Gibson. And today we have the great pleasure of getting to have a very frank and open conversation with Mr. Reed Goossens. Hello, Reed.
G'day, fellas. How are ya?
G'day. God, I love the way you say that.
Have you guys figured out where he's from yet?
Yeah.
Yeah.
West Texas, right?
Yeah, West Texas, right, exactly. So Reed, first of all, thank you for having us both on your show. And we had a really great time doing that, and wanted to reciprocate just because that conversation was so great. And rather than me reading a long, drawn out bio, you've got a very illustrious history already in the real estate investing world. Can you tell us a little bit about how you got into it, how you got started, how you kind of moved through some of those initial pain points, and how you arrived at doing the stuff that you're doing now?
Sure. Well, first of all, thank you for having me on the show. I know I really did enjoy having you both on my show. It's always good to have the 1-2 punch on my show. So thank you for letting me come back on yours. So originally from Australia. I have a weird accent. I moved to the United States back in 2012, and I moved here for 2 reasons. One was for the love of New York City, and the other one was to chase a girl who is now my wife. So I moved here with really no expectations to get involved in real estate. About 2 years prior to that, I was living in Australia. I just come back from traveling abroad where I had met Erica, my now wife, and I was sitting in my engineering, my background's in structural engineering, and I was sitting in my engineering cubicle back in Brisbane in Australia, and had this great 2 years being abroad, and then really sort of hit me smack on that I didn't want to sit in a cubicle for the rest of my life. And I picked up the book, somehow picked up the book Rich Dad Poor Dad in 2009/2010, and then was educating myself about the Australian real estate market, because I was like, this is really what it is at, where it's at, being involved in real estate investing. But I didn't know how to get involved, and so started attending a bunch of real estate investment, the equivalent of a real estate investment association in Australia, but still had very much the bug to come and live in the United States. So in 2012, I quit my job. Erica was studying in Australia for her master's degree, and she's American. And we moved to New York City. I didn't have a job lined up. I quit my job in Australia. I didn't have a visa sorted, and I tried to hit the ground running. And within, I think, the first month, I had a job offer and was able to get, that first yes. And that first yes was going to get me, to stay in the United States. And then from that, I think within the month after that, I was at my first New York Real Estate Investment Association meetup. And, I thought Australians, we had great meetups, but, particularly being in New York City, it was like, taking information out of a fire hose and given the different investing lingo that I had to get my head wrapped around, and I didn't understand like credit or what an LLC was. And so, but I knew that the barriers to entry here in the United States were just so much lower than they are in Australia. And I was seeing these crazy cheap properties, 4 or 5 hours drive from New York City. And I think within 6 months of being fresh off the boat, I'd purchased my first triplex all cash for $38,000 because no bank wanted to lend to me because I was fresh off the boat. So that's a little bit of how I got started and how I moved to the United States. And I'm sure we're going to get into.
So where was that? You're saying that was in upstate New York? What city?
That was in Syracuse, New York. And the only reason I chose Syracuse was that I could drive there in 4 hours. I was living in Brooklyn. It was close enough. I could get there in an emergency. And really, it was just good to get my feet wet. I remember reading a bunch of books. My nose was in a book on the subway, going to and from work. And I was like, I need to just, get going. Because at this point, I'd read Rich Dad Poor Dad back in 2010 and was doing some stuff in Australia. I was going to pull the trigger on some stuff in Australia, like do a flip or a lease option or something like that. But then, had some money to come across to the United States and then just had a little bit of money left over. And I was like, I need to get going. So it was probably like 2 years at that point of self-education that I needed to just get involved. I was never going to get to deal number 10 without just having to go at deal number 1. So yeah, bought it for $38,000. On paper, it looked great. First 6 months went really, really well. And then Section 8 housing, I had a small drive-by shooting. So I had to get rid of that property pretty quickly or get rid of that tenant. And it just sort of went from bad to bad. And I was able to buy a second property through the fact that I built local relationships with local bank managers at the local credit union. And I was able to buy a second duplex. And so I was able to scale a little bit, quote unquote scale, but I was able to get going here in the United States. And that was really, it was great, but I also had my challenges along the way, which was, drive-by shootings and dealing with Section 8 housing and really understanding that if you're going to get involved in that type of, smaller, lower end size market, less than $50,000, you really need to come with maybe some bags loaded with some cash and buy 4 or 5 of them at a time or 6 of them at a time. So you have the efficiencies of property management, which in hindsight I didn't have. And, someone who was earning 8% on my, $1,000 or $1,200 a month in gross rental income may not necessarily been putting a lot of time and effort into the tenants that were going into my property. And so hence why there was friction, hence why there was drive-by shootings. And so it all sort of maybe crumbled apart. I didn't lose my shirt on it, made some money, sold the property. The second property actually I held for a couple of years because it was like an ATM machine and I just kept printing out cash and I bought that for $45,000. So it was a bit of a hit and miss. Like one was really great. The first one was not so great, but that, again, I needed to learn, I needed to get going, and there was only so much I was going to be able to read in a book. Going back to that time, that mindset of like, well, I just needed to get in the deep end and start swimming because I was never going to get to deal number 10 without just getting started. So yeah.
Like how many investors, that we all talk to, all three of us, where they just won't ever pull the trigger. I mean, it's just like reading books, listening to podcasts, and, like I have the same exact story, bought a, duplex and then another duplex and then those didn't turn out so good. But at least I got in the game and getting into the game that way, even though I learned from my mistakes and got better and stronger, wiser, right? And then now we're elevating everything that we do. But if I would just kind of waited around for the perfect opportunity or perfect deal, like probably would still be waiting. I don't know. I mean, unless you get into action, nothing really great's can ever happen. So that's awesome.
Yeah, and a mentor of mine, said to me a couple of years back, it's like, you don't make a ton of getting involved in real estate. And this is not maybe universals or maybe to my syndication business where I partner with other people. But you don't make a ton of money on your first deal. It's about getting your foot in the door. And then that deal can get you, runs on the board. It can get you credibility with investors, and that can snowball into bigger and bigger deals where you can make more and more money. But it's that first deal, everyone's worried about making a ton of money and hitting it out the park. Deal number 1, it's like the reality is you're probably not going to. And if you can get a base hit, fantastic. And that's all really that you're looking for, because it'll be those consistent base hits that start to build that portfolio that starts to build that long-term wealth. So
I was given the advice to just make sure the first deals that you do don't knock you out of the game.
Right. Yes, exactly. Don't be knocked out of the game because you made a silly mistake or you over leveraged or whatever it might be. So yeah.
So I'm curious to know, so what happened, because you speak about leverage of those first couple deals, what happened after that? Like, how did you sort of stair step off of those initial experiences? Because I think that's a key piece here.
Yeah, so the big thing was that still working in New York City as a structural engineer. I had 2 properties at that point in upstate New York. No, actually a third one as well, because I bought a third little a third duplex. So so I had seven units in total over 3 different properties. Then I bought with my first OPM and other bringing in outside investors. My dad got involved in a fix and flip that I did in Philadelphia. Again, still working in New York City. The Philadelphia flip went okay. It didn't go great. Again, down to you make money when you buy, you lose it through bad management or bad general contractors or whatever it might be. And so that was, again, another bit of a surprise in terms of, not surprise, but just a cold shower in terms of a lesson. And then from that, it was really more the fact that I was like, okay, I've done these small properties, tried my hand at flipping. It was, getting a lot of money out the door, but then, waiting, 12 months to get it all back. And I really needed to start understanding how to scale it. And it was through a conversation with a good friend of mine who came down from Canada. And I was having a beer with him, I think it was in 2013. And I said, oh, good luck, I've got this. I'm crushing it. I've got these 7 little units in upstate New York. And I think I was cash flowing maybe $800 a month or something. And, I had this flip that I was doing, even though it wasn't going the best, it was still going. And he's like, man, that's awesome. Congratulations. But, and then he told me about, he was closing on a 70 unit deal. And I said, 70? And he said, yeah, 70. I said, how the hell did you do that? And he talked to me about other people's money, how he got a mentor, and that mentor helped him find a deal where they got a seller carryback finance. He got some friends and family involved, and they were able to put down $500,000 on I think a $1.2 million deal in not a remote, but in a secondary city in British Columbia. And I was like, this is incredible. And this is exactly what I needed to up my game. And so from that conversation, I really went out and got myself a mentor, because I had got to the end of my tether in terms of my own lending. I had 3 little properties plus a little flip. I was still really hamstrung by my income, my W-2 job. So really I had to get that next step, get a coach who could help me. I could maybe use his credibility to attract other investors. At that same point, I had also gone through a bit of, the turbulence of getting started here in the United States, because, again, as I said, I didn't know what credit was. I didn't know what LLC was. And so from that, I started my own podcast, because I also noticed that a lot of international folks were trying to invest here in the United States. And that's where the investing in the US started. And it was really to talk to the international investor, because I just gone through it, right? And so that started 4 years ago, back in 5 years ago now, 2014. And from there, that was an opportunity to build my investor database, to focus on that, where I could then partner with my mentor on the deals that he was finding. So sort of really focusing on my brand. And through that, I raised a little bit of money we co-GP'd together, raised a little bit of money, did a bit of asset management, learnt the ropes a little bit whilst still working full time. And then after a couple of years doing that, I got into doing my own deals. And now to date, I'm a co-founder of a company called Wildhorn Capital, and we manage about $150 million worth of multifamily US real estate. And the really big thing here is that, for your listeners, is I don't say it to boast. I say it I came here, didn't have a network, I didn't go to school here, didn't have family here, had very limited funds. And just with the sheer determination of just wanting to make it happen and achieve financial freedom, I've done that in a period since 2012. And as I said, I picked the book Rich Dad Poor Dad book up back 10 years ago. So as they say, you can overestimate what you can achieve in a year, but you can underestimate what you can achieve in a decade. And if I look back, I would, when I first moved here, the fail safe was, well, if I don't get a job, and my relationship with my then girlfriend, now wife, didn't work, I'd move back to Australia and I'd get back into civil engineering. That was the worst thing that could happen, but at least I'd had to go and had a crack at giving it a shot here in the United States. And I think that's the biggest thing, that looking back on this journey, is that my big fear is waking up at 65 years of age and having regret and thinking, geez, I wish I'd done that. Or geez, I wish I had to go. And if I'd had to go and fail, well, at least I had to go, and I was still, had the calmness of mind to go, well, good on you. At least you gave it a crack. So yeah. So
there's a lot to the story from
I got 9 questions.
Right. So all of a sudden we're at 2 duplexes for, 38K or whatever. Now we're at 150 million. Yeah. There's certainly a lot you could probably dive into.
Let me ask this question. So first of all, obviously you don't need to mention any names, but how does one go about finding a mentor? How did you find your mentor?
Yeah, good question. So I had been, very much pitched all the pitches that you can have, $10,000, $20,000 mentor courses. I found a guy who was really my age, or a little bit older than me, and he'd only done one deal, but he'd done a big deal. It was, I think, 170 units, and was looking to grow, and he was also affordable, right? So it was sort of a combination of he'd done a deal, he'd got, see that he was trying to grow something. I could come along for the ride, and we could maybe grow together. And that partnership, I actually introduced him to his now business partner. Back at the time was a friend of mine who was also maybe a little bit ahead of me in terms of the growth. And so they've gone off and created an incredibly awesome company. But it helped me get involved and got in the game. And as it's back to what we said before about, not making a ton of money in your first deals, I didn't, because I was only taking a small portion. But it got me started, right, in the syndication space. And that there got me track record, that there got me some runs on the board. And then I could then scale that in terms of trying to, okay, well, I've learned this now, maybe I can go out and do it on my own. And I did. And I successfully made that transition into doing buying deals with my own investor database and chasing deals with my business partner, Andrew Campbell at Wildhorn Capital. So yeah, that again, there's a lot of details in there that we can dive into. It's sort of like the iceberg analogy, but it was a lot of hard work and a lot of sleepless nights and a lot of juggling a full-time job and trying to build a business on the side. And don't forget, I was still working. I needed a job to be in this country because I needed a visa. So it was all these things that I had to deal with. And it's and not to boast. It's not to boast, but it's just more that when you really, really want to go out and achieve something, you'll find a way to make it happen. So
yeah, I think that's key, and I think that the determination. But the other lesson that I pull from that is you can hustle and work as hard as you want, but a lot of being successful in this business and in most businesses is from leveraging relationships. Mm-hmm. Mm-hmm. And look where it got you. Look where Jack and I met on a call. We were just talking about some marketing stuff within the real estate space.
Right.
And I was helping him with another business. And so, we've created a nice company out of this. So you just never know who you're talking to, or, it's always good to reach out. So one of the things we started talking about before we hit the record button, which I really want to dive into, and there's really two things. One of them is mindset, because what I find curious is that, and obviously it's not all Americans, but there seems to be a lot of lazy Americans, right? I mean, it's. I don't know.
There's lazy Australians as well. Trust me. Don't get me. There's the same.
Australia too. I don't know. It just seems to me there's something about this idea of America, not America as the country, but this idea that America is, land of the free, home of the brave, land of opportunity.
Yep.
that non-Americans look at it as, this is a place where I can go make my mark. Mm-hmm, mm-hmm. And I'm not saying that that's wrong. It's fantastic, but it almost seems like outsiders feel this and know this more than Americans. Mm-hmm. Like Americans are jaded to a certain example. This is what my opinion. I'm not necessarily shared, but
we just take a lot for granted, like what the opportunities that we have. So
I think in general,
your perspective on that.
I think in general, the Western world, Australia, England, Europe, this sort of opportunity, capitalism, free markets, freedom of speech, all that sort of stuff is very attractive. In specifically to one Western world to another Western world, so Australia to America, there was just differences there that it was just a bigger market. Like purely, Australia has 25 million, 26 million people, so not even 1/10. And we're the same land mass, excluding Alaska, as the mainland America. So just the sheer volume of this market, and I know a lot of other successful Australians and other expats, not just Australians, who come here to try and break into that market because the US is, in terms of real estate investing, the most unique. You can't pinpoint another country, Western country, that has the geographical diversity that the United States has. And what I mean by that is you have high appreciation markets like San Francisco, LA, New York, Boston, Miami to some extent. On the coasts, Chicago, you could probably throw in there, Seattle. Then you have these secondary markets. Then you have these tertiary markets, right? And you're inhabiting north, south, east, west, and you have 300 million people that you have to house, which stems these smaller communities that are more affordable. In Australia, I would never find something for $38,000 that was a triplex and that could cash flow $1,000 a month. It just doesn't exist, right? We're landlocked. Our country is an arid desert, so everything's on the coast, everything's around the cities, and it's really landlocked, and thus the value of prices are similar to Los Angeles and New York City. So combine that, I can't think of another Western world that has that much geographical diversity from a real estate investment point of view. Then couple on top of that the lending environment here from I'm talking more commercial, but even resi. It's just in Australia we have the 4 major big banks. That's it. You guys have got thousands upon thousands of lending opportunities, and I really look at the United States as a mini Europe. Like you have your different cultures from, you got your people from Boston, you got your people from the South, you get people from the Northwest. Like it's really like a little, each state is a little country. And that then builds, other diversities and other awesomeness. So back to your point of the coming here and making a mark, I think that is very true. Coupled with that is like the reason you talk about the laziness perspective. It's more, I spoke about giving it a go, giving it a crack. I'm very fortunate, and I can speak, that I come from another country that there's wealth, and I could go back and make fortunes in Australia. Some people are less fortunate than me. Immigrants that are less fortunate than me, but or expats that are just, they can't go back and they've got to make their mark. And so you see the expat community, regardless where you're from, their backs up against the wall and they're going to grind, until they have a choice. Work. Plan B. There is no plan B. Like I was fortunate enough to have a bit of a plan B, but also at the same time, I was like, very much like, I can't fail. Like going back with my tail between my legs was sort of like a shame. I viewed it as shameful. But it was also, when you sat down and think about it, it's like, it's not that shameful. It's just like, well, you gave it a go, and at least you gave it a go. And that's probably a good enough, and to the point of like, you put yourself out there for opportunities to come to you. So you guys spoke about how you two met each other. You just happened to be in that mindset of open to a potential partnership, and boom, all of a sudden, many years later, you got a really successful business. Same thing with me. It was like, I need to move to New York City. I just wanted to live in New York City. Didn't know what was going to happen. Didn't know the fact that I'd start investing in real estate. And all I knew is that I needed one person to say yes to me, to give me a job. I could get the visa. Boom, I'm here. The dream started, right? And so that was just step one. And then from there, doors opened, and it just, you look back and you're like, wow, all these doors and all this travel.
So how are you generating so much investor capital? I mean, out of the 150 million, guessing a big chunk of that is investors that you've brought into the deals, syndication type deals. Can you talk about how you've been able to do that in five years, 6 years?
So there's other partners involved, not just myself. We're all, think of a plane, and I always use the analogy of, if I'm getting from LA to LA to New York, it would cost me, Reed Goossens, a lot of money to hire a Boeing 747, but I can split the cost up with passengers. Like some passengers will sit in first class, and those passengers are the key principals or other partners in the deal. They might bring in money. They might bring in certain expertise. So they're sitting in first class. Me and my business partner, the captain and co-pilot, and they've got everyone in coach in the back enjoying the ride. And the ride happening to be, from point A to cash flow and appreciation. So that for your listeners, that's sort of the analogy. So I have other partners who sit in first class, who bring in equity as much as, and do other roles and responsibilities. I bring in a portion of equity as well. And to your question about how I've got that is, through podcasting, through sharing my story, through the fact that I do have a kind of an interesting story. Like everyone has an interesting story. It's about, when I first got started in podcasting, I'm an engineer, for crying out loud. I'm very much a black and white brain. I didn't know how to personal brand, and probably my dad and my mum were the only ones listening to my podcast when I first started, but I had something to say and I had a bit of education to speak about, and people resonated with that, and through that had conversations, and it just snowballs. And so there's not one specific instance where it was like, it just, it happened. It was just a long period of consistency, and long period, it's quite not that long, 5 years ago, that helped now stem a really awesome group of investors who continually to invest in our deal. And we're constantly adding people to, all the time, as the brand and the business grows, people are, like you guys, people are reaching out, wanting to, read a book or, have a chat or heard you on a podcast or this or that. And that's the organic growth of this business. So, yeah.
I'm jealous that your mom and dad have listened to your podcast. I guarantee mine has not listened to mine, nor has my wife ever.
And I'm sitting here going, okay, wait a minute. I know mom never listens, and my dad's dead. So yeah. I'm 0 for 2.
Yeah.
Yeah, that was more the fact that
those are a tough crowd to crack.
Yeah, it is. But that's where you start. That's where I started. I went and started raising money. Talking to my Australian family and friends about the benefits of investing here in the United States, and just through consistent, education and, podcasting and blogging and all that sort of good stuff. It didn't happen overnight. It definitely wasn't flicking on a light. I had a lot of people in the beginning just like, go pound sand, Reed. Like, I've got aren't you an engineer? I thought you were an engineer. What are you doing this real estate business thing? So again, having to change their mindset about what I was doing. So it's a long road, a long process, but it can, through certain marketing techniques like podcasting, like education, you can change those people's mindsets. So, yeah.
But you're also talking about the value of consistency too. And
exactly.
So
yes.
It's like, okay, so you have been an engineer by background, but as long as you continue to have those conversations, then you start developing certain expertise too. I mean, I said to Jack, a week ago, we were having this conversation about, think about the conversations that we are having now, 3 years into our business with our investor base and other working partners and things like that, versus before we our podcast and we were just peddling a few turnkey properties to whoever would listen to us. Mm-hmm. It's a vastly different business now. I mean, we still essentially are the same, trying to do the same things, but we just do things so much better and we know so much more just because of what we've been through.
Right.
So in that, and as you do things better, you get a better sort of feel and energy for, what the finished product's going to look like and all that. And then that also comes through energetically in those conversations. It's not necessarily that you're saying things that much different. It's just you have a certain knowledge and confidence and belief level behind the words.
Oh, and you're also putting in systems, right? You're generating business systems, and a business system might be a podcast that we're having a chat with some other experts about whatever it might be, X, Y, Z. And some of your investors may grab a little bit of a nugget out of it. Oh, God, it was great what Shecky said about that certain thing, and I'm going to take that and I'm going to have a conversation with them again. It re-engages them on a different level. So I think it's all about business systems at the end of the day.
Yeah. So I want to just take a quick pause because I know that Nicole is anxious to come on and tell us about the home run of the week. So take it away, Nicole.
Hi, this is Nicole, your Director of Investor Relations at High Return Real Estate. This single-family home on Eugene Street is the perfect property to add to your portfolio. We acquired it for a fantastic price, and the rehab went off without a hitch. After all expenses, the cash-on-cash ROI of this one is nearly 12%. And remember, like all of the properties you buy from us, you'll be able to see the full scope of repairs, the third-party inspection reports, and you'll get our unbeatable roof-to-foundation warranty. This one is truly a home run. Just send me an email at homerun@highreturnrealestate.com. That's homerun@highreturnrealestate.com, and I'll be happy to send you the full investor folder. Talk to you soon.
All right, thank you. And we're back with Reed Goossens. This is an amazing conversation. I want to shift gears a little bit because what we have been experiencing, I don't know, you're in the syndication world, so you're raising money for larger projects. Mm-hmm. We, to a certain extent, aren't necessarily raising money, but we're selling turnkey properties. But in both instances, there is this big, huge sort of elephant out there called investor expectations. And one of the things that, it doesn't matter how good we are, it doesn't matter how many affidavits we put in place when we sign a purchase agreement. But one of the things that we continually battle, especially in this world of the internet, where everything is all about, online marketing, and there's so much ridiculous hype out there, that investor expectations are very, very difficult to manage. And I think we do a very, very good job of it in our company, but we still run into problems with that. And I'm wondering what's happening in your world, in the syndication world, especially when, essentially you're just selling really a piece of a large project. So like to use your words, you're selling a seat on the airplane. How do you manage their expectations, and what are you seeing in your world?
Yeah, we're seeing the similar things to what we're talking about before we press record, reducing cash flows, right? Everyone wants to cash flow. A lot of international folks have realized the benefits of investing here, and you've had a ton of international capital come to the United States buying everything from single family, swaths of single family, to multifamily, to office buildings, because of that cash flow, that yield, and people overpaying for that cash flow, right? And thus that is driven down, or driven up, I should say, the price. So it's become this frothy market, and trying to generate I think you spoke about a 10% return prior to the show. It's 10% might now look like a 7 or 8%, and if you sold a 7 or 8% before, that might look like a 5 or a 6%. Because prices are going up, and bidding wars are happening. I know on my side of the fence, at least, it's I put an offer on a $52 million deal yesterday. There was 12 other offers on that deal. And I was not the first one, right? And so there's best and final rounds, and that your price keeps going up, and the cap rate keeps compressing. So, and everyone's thinking, oh gosh, there's going to be a correction. And there is going to be not a correction, but it's going to be maybe an easing. But we have seen a lot of upward trend in the since the recession. Where I'm from in Australia, if you double your money in 10 years, you're making a really good return. A lot of investors since the recession have doubled or tripled or quadrupled their money in less than 5 years, which is really unheard of. And that is thus where their expectation is starting from. You got to drag them the other way and realize that, hey, you've had, just the best time, maybe in the last 40 years to invest in some real estate, particularly in the United States. And you've seen some great appreciation, you've seen great cash flow, you've seen a combination of both. We're maybe not in that market anymore, and not that it doesn't have the fundamentals to support it, just that things are maybe easing or plateauing off. And so you thus then need to change your expectations of the return profile. And so, like any good diversified portfolio, you're going to have some great cash flowing assets. You're going to have some great, high yield appreciation assets over time, and a combination of the both. And so for us on our side of the fence, we're definitely reducing our what's called preferred returns to our investors. We're doubling down in markets where there's true growth. So we're not going to go out and be speculative in a tertiary market. We're looking at high barriers to entry for new construction in those markets. So places like Austin, Texas, where Austin has dramatically changed to really a coastal city. It takes 2 years to get anything approved in the local municipality to get to get multifamily built in Austin. Price per square foot is in downtown Austin's trading for as much as downtown Los Angeles. Price per square foot on the rent, they're trying to get $2 to $3.50 a square foot. And so we as investors, we're trying to pick up the outlying suburbs, larger multifamily that maybe not been touched. I might be slightly, it'll be a reduced cap rate, but I'm still want to try and have that cash flow, that separation between the in-place cap rate and the interest rate, so I can provide a bit of cash flow. But in saying that, also having that same conversation with investors to say, well, look, we're really confident that this market's going to continue to grow, and instead of doubling your money in 5 years, maybe we're going to double your money in 8. And that's still a really good return, and it's better than what you're probably getting in the stock market, and your money's backed by a physical asset. So all these conversations and more, in order to get deals to pencil, in order to keep getting deals done, is really the conversation we've been having. So yeah.
Yeah, and I think one of the things we're trying hard to do is to hold our ground in terms of honesty and transparency. And I hate saying that because the guy who's usually talking about honesty and transparency is the guy who usually you can't trust. So I don't even really like talking about it. But we find that, and I don't know if you're seeing this in your world, but when we just kind of tell it like it is, and almost just say, look, here's worst case scenario. Here's the bad things that could happen. You need to be prepared for this sort of stuff. And this is just really just a projection of what we think returns might look like, but they could look as bad as this. And to just try and have an investor go in, eyes wide open, find that sometimes speaking that level of truth, almost it's counterintuitive. It builds some trust.
Yes. Sorry, go ahead.
No, I'm saying there's not too many people that are saying that, number one. But I oftentimes have had conversations with investors where we do this and then we never hear from them again because, like I said, they're still sucked into all the other hype and things that are out there. And it's a source of frustration.
Yeah, and I think it also comes down to us as operators talking to the right type of investor. I know we've definitely graduated from talking to, we'll call them sophisticated, know somewhat about real estate, but maybe don't understand long-term, not necessarily analysis, but long-term horizons and stuff like that. And when you do have those frank conversations with people, those people tend to go away. But understanding that you are investing in real estate at the end of the day, and there's going to be risks. Like you're not going to find a zero risk investment. If you want a zero risk investment, put it in the bank, just leave it there, but it's not going to go anywhere. Right. So you have to understand those risks and how to mitigate those risks over time. And if you can find an operator like yourselves, or myself or whoever, you trust, and you have those frank conversations, at least they're being honest with you that this may happen, and be prepared, right? Because we can make it look all rose tinted glasses on one end of the spectrum, but there could also be a reality on this end of the spectrum that could happen. And when it does, you need to write it out, or you need to understand what to do in those scenarios, because there is a greater likelihood than not that it may happen in the not too distant future. Worst case scenario, if we come into a bit of an easing or a recession or whatever that might be. So yeah.
Yeah, well said. And speaking of well said, I know that you have recently authored a book, and I know it's not even your first book. Can you tell us all about that?
Yeah. So just quickly launched, not quickly, it was a long time coming. It's called 10,000 Miles to the American Dream. It's the story of our financial freedom. It's a group of 8 Australians. I founded this small little group of Aussies about 3 years ago. I've interviewed some of them on my podcast, and just really through sheer, being an entrepreneur can be a little bit lonely. I was like, hey guys, I just started an email. You guys don't know each other, but here's a little bio on everyone, and let's start with a monthly call. And through that monthly call, we decided let's do a yearly meetup with our wives and girlfriends, and being Australians, we sort of have the similar jokes, and we talk about sports and enjoy a good laugh. And then I think we met up 2 or 3 times. And on the third time, we're like, hey, we should write a book. We should, we all have different backgrounds. We've got guys who come over here to start real estate technology companies. People are investing in hotels. People are investing in mobile home parks. Myself talk a little bit more about branding, multifamily, syndications. There's a guy who does just turnkey rental, $100,000 to $150,000 properties in San Antonio. And everyone has a story. Everyone has a chapter. Everyone has a story. And we just launched it. We call ourselves the Real Estate Mates. It was originally not called that. It was called the Aussie Real Estate Mafia, jokingly, tongue in cheek. But we launched this book, and it was launched on July 4th. And we started a little bit of a book tour. And you can pick it up on Amazon if anyone's watching. It's just 10,000 Miles to the American Dream. So yeah.
Love it. Congratulations on that.
Thank you.
That's not easy to do. I mean, I've had a book on my mind for the last decade, and it's not anywhere been started yet. So congrats on just attacking that and getting it done. I mean, that's
well. I think, look, the real truth is, mate, when you've got eight authors, everyone does a chapter. It makes getting the book to the finish line a lot.
Yeah, that does
help put pressure on each other to get the chapter done.
Exactly.
So I'm looking at the clock, and we're going to run out of time here. So one last question, which is the favorite question that we like to ask, is what is the question that we haven't asked you that we should have asked?
That's a good question. What's the one question? I think the big one is the advice question, right? Like, what advice do you have for people listening to the show?
Perfect.
The bigger piece of advice, I think, the underlying theme of my story, and hopefully what that people are getting out of it is consistency, is not giving up, and a lot of people tend to quote unquote fail at something because they may not necessarily have the right mindset on the front end. So if you're going into pretty easy one. Losing weight, right? Like, I'm going to lose weight in 30 days. And you get to the end of 30 days and you haven't lost it. You're like, you're more likely than not to give up. Like, oh, it didn't work. Screw it. I'm giving up. It's the same thing with being an entrepreneur or being an investor or getting involved in the real estate industry or building any business, really. You have to have that right mindset on the front end. Like, to that point I said before, you overestimate what you can achieve in a year, but you can underestimate what you can achieve in a decade. And if you're going in to this business thinking, I would like to achieve some sort of financial freedom in 7 years' time or 10 years' time, you know, you are more likely to set your mindset up for success, because it does take that long. There are some folks out there who can, I've, you know, through investing in single family properties, I got, you know, I was financially free in 2 years. Great. But the majority of us had jobs, have kids, and have, you know, got to put food on the table, and you've got other things that are going on in life. And so it's the fact that you've got to run your own race. You've got to be consistent with what you do. Becoming an investor and an entrepreneur and a business owner and all that sort of stuff, really, you've got to become part of your DNA. And if you have the wrong timeline on the front end, you may give up before the time, you know, comes to, you've allowed it to grow and blossom. So really, it's just about that sort of long-term horizon, consistency, and putting one foot in front of the other.
Beautiful words of wisdom. I think, you know, that long-term consistency is so key to success. And, you know, we're just seeing it now. And we've been, we joke around, we're moving into version 4.0 of our company. And, you know, and we're really starting to finally get some really good footing, and, you know, regular deals, regular business, you know, just everything systemized. And it's taken a long time, and we've been kicked in the teeth a lot, but we kept at it.
Right.
And it makes a difference. Anyway, thank you so much for taking your time and sharing your wisdom. And you know, it's been fantastic. Always enjoy talking to you.
Yeah.
Thank you, guys. I really enjoyed coming on the show, and you're doing an awesome job, and can't wait to watch you guys grow as well.
Yeah, thanks so much. Are you living in Austin now?
No, I still live in Los Angeles. I joke with my business partner that Austin's not big enough for the both of us. So.
Okay. All right. That sounds good. All right. Thank you again. And thank you, listeners. Really appreciate it. And we'll see you next time.
Thank you, Reed. Have a great day.